What's up, guys? Hope everybody had a good Father's Day weekend. Now let's do a little recap of what has happened in the markets over the last couple of weeks and what I'm thinking is going to happen over the next few months here, especially over the summer months when the trading volumes are a little bit lower and what you expect. So let's start off with the sentiment. So up until recently, guys, I still thought that we could see a nice bounce here over the summer months, anywhere between 8 to 10%. And that's kind of how I was structuring my portfolio, buying the dip, which again, I do believe in these companies long term, so I'm not upset that I bought pretty much any of the companies I did, but I have changed my view on this bounce here, especially after the last CPI data has came out here. So let's talk about those numbers. So they came in at 8.6%, which was worse than expected. The sentiment in the market was that we would see that peak inflation in April, and then since then we would start to see those numbers come down. Well, guess what? Data in June comes out, 8.6%, worse than everybody expected. There is panic in the broad market. The Fed is forced to do one of their highest rate increases in over 28 years. And here we are, more selling. So what do you think is going to happen if the CPI data in July comes, at 9%, 9.2%? What if we go to double digits? Shit's going to hit the fan. People are going to panic and we're going to see more downside. So that's why I have paused a little bit of buying for now. I still want to see, what happens from this point. Do we start to see that data start to inflect downwards, or do we, does that inflation keep running hot and Fed is forced to do bigger rate hikes, So I'm pausing my buying. However, I have changed up a little bit of my strategy here. I do buy a little bit more puts. I do buy a little bit more bear call spreads. And if you guys want me to put out videos on those and kind of teach you that strategy, let me know in the comments below. I'd love to, possibly start putting out those kind of videos out there for you guys to learn how to make money in a bear market, because like the mentors I had before, they all said you can make money in any kind of market: bull market, bear market, stagnant market. There's just different strategies you got to use out there. So let me know if you'd be interested in that kind of comment let me know if you'd be interested in that kind of content, and let me know in the comments below. Now, with that inflation data coming in at 8.6%, those numbers are already manipulated. Those aren't really the true inflation numbers. If you guys want to see some true inflation numbers, go to shadowstats.com. On that website, they calculate inflation and CPI, how it used to be calculated, and their figures are coming in at 16.8%, which is pretty wild. But if I look at my Excel spreadsheet where I kind of track my budget for the year, it's definitely more accurate. Like, my expenses this year, just like basic necessities, have gone up by anywhere between 18 to 20%. So I do believe those numbers more than I do believe that 8.6%. Now, talking about Jerome Powell and the Fed meeting last week, honestly, he didn't seem too confident. It was probably the least confident I've seen him in quite a long time. He was shaky. He didn't quite have the answers. Didn't seem like assertive, even though he tried his best to try and calm down the market, and trying to still push forward the idea that we're going to try and get that soft landing. The Fed isn't going to try and induce the recession. Honestly, I don't believe any of it. They're, again, just lying straight to us, straight to our faces. So I do expect that we are possibly in the recession already, and that is evident when you go out to stores. I went out to mall. The mall is practically empty. You go to stores, other than basic necessities, people aren't really buying, other things. Nothing like TVs, nothing like, bags, shoes, clothes, something like that. There isn't too much spending on those non-essential things. So I do think we're already in a recession, and we'll see when those numbers come out for Q2 to be officially in the recession. Guys, we got to put back-to-back negative GDP numbers. Well, Q1 we had those negative GDP numbers, so all we need is Q2 to come in negative, and we're officially in the recession. Now, how deep and how severe this recession is going to be, it all depends. A lot of the analysts, again, are projecting that this isn't going to be as severe as 2008. Although in my case, I think we're a little bit in bigger trouble than we were in 2008. Even though the financial market isn't quite collapsing, there is lots of inflation all over the world. There's still lots of, shortages, the supply chain issues out there, China lockdowns, you got the war, you got the bond market crashing, you got the crypto market crashing, you see the stock market crashing. Real estate, I think, is next. So again, I think this next recession is going to be if not more severe than at least the same like 2008 was. So again, just prepare out there, guys. Get ready, you know, start to save those money. Try and put everything aside if you can, and make sure to check out that video on my 5 tips, you know, that I dropped down. And otherwise, I think that is it for this short video. Hope you guys appreciate this. If you did, let me know in the comments below. Otherwise, have an awesome week, and we'll see you in another video. Ciao, ciao.